So, why is there so many layoffs happening in the tech job market? In this video, we will be reviewing one such article and let's try to understand that what's causing all this anxiety. Tech sector layoffs explained. What you need to know. Large tech layoffs continue through 2024 with headlines showing thousands of people losing their jobs. Here is why the economy, interest rates and pandemic hiring are to blame. So we already have some big words: economy, interest rates and pandemic hiring. And this article is written by Amanda Hetler, and this is published on 1st of April 2024 on April Fool's Day. But this article is very serious, I must assure you. Okay, so layoffs are making headlines, and most of seem to be centered on one job sector, tech. The tech industry increased its layoffs by 649%, that's a whooping 6.5 times, in 2022, which is the highest since the dot-com bubble more than few decades ago. According to the Challenger report, more tech employees were laid off in 2022 than in 2020 and 21 combined. I mean, those days it was paradise in the tech market. Like every developer had 4 or 5 offers, and people were simply juggling through companies. And now, of course, things are not so rosy. Okay, so as of March 2024, more than 200 tech companies have laid off more than 50,000 employees in 2024, according to layoffs.fyi for your information. And this is only in the first quarter itself. The overall labor sector appeared strong in 2022 and into 23, but the tech sector layoffs tend to be the most visible. Because the tech giants have many employees, a small percentage of layoffs still translates to thousands of people losing their jobs, even after the dot-com bubble. The tech industry has been resilient to economic challenges due to its size and growing presence for personal and business use. Most of these large layoffs are from big household name companies. There are several factors contributing to tech layoffs, including the economy, inflation, higher interest rates, and overhiring, and COVID-19 pandemic job correction. So, again, some big words: economy, inflation, higher interest rates, overhiring, and pandemic job correction. We will try to see about each of these one by one. And the first thing that we will be discussing about is artificial intelligence. And as techies, we very well know what this is. We are also in a little bit of anxiety that AI may be taking over our jobs or not. So let's see what they're saying. So AI is splitting the tech job market as companies look to hire employees with AI related skills. Around 10% of US jobs face a risk from AI disruption, according to the Economic Times, according to the economic report of the president. President means Joe Biden. So Joe Biden is also making reports on AI job related risks. I mean, it's possible. I mean, it's a huge economy. So yeah, if it's coming from Joe Biden, then I surely believe it. I'm not American, but I really like Joe Biden, so that's why I'm saying. Okay. This distribution does not mean a job loss could complement some of these workers and increase productivity. The biggest fear of job loss due to AI is for those who do not learn how to use AI. And so we should be learning how to use AI to save our jobs. That's what it looks like. And the best way to learn how to use AI is by buying courses. So you should definitely try to look out for courses that teach like uh, create a report in 3 minutes using ChatGPT, or create Mid Journey and generate 5,000 children's books images in a day, and then sell books on Amazon, and many other kinds of skills. So I'm sure there are a lot of courses like that in the market, and you should definitely take those courses and like use all your savings to buy some AI courses, because AI is the future, savings are the past. And yeah, definitely, I mean, you should skill up using AI. Maybe I should also, and maybe I should also launch some courses, maybe, because this is the future, right? Savings, forget about savings. It's all past money, right? Let's try to spend it all on AI. Anyway, jokes apart. However, IBM fueled the AI job takeover fire when the company told employees in a meeting that it plans to cut 3,900 jobs in the marketing and communications division, 1.5% of its workforce. The company also planned to stop hiring for roles that could be replaced by AI, according to Bloomberg. Okay, so things little bit not okay with AI, and then comes economic downturn. Debates of a US recession started when data from US Bureau of Economic Analysis showed a shrinking economy. In July 2022, for the second straight quarter, economists are unsure, and the fear of recession still looms in news reports. Other conditions threaten the economy's health, such as the government debt ceiling, the war in Ukraine, the ongoing pandemic, and the rise in interest rates. The companies turn to layoffs as a survival method to cut costs and when revenue and profits get leaner. And yeah, so some big words we have discussed over here. So what happens is the United States is raising interest rates. Why they are doing so, I'm not really sure on this, but they do so for some reason. And when that happens, it's actually easier for companies to save money because they will get high interests. And when the government, not the government, I believe it's their federal bank, they give low interest. Companies then spend up their money because they are not getting much money anyway by saving in the banks. So that is what generally happens. And now the interest rates are high and it's getting higher and higher, maybe. And so we are in a terrible shape. There is not enough money in the market because everything is in the bank, and we are getting laid off as a result of it. And other conditions are like government debt ceiling. So this is like the US government borrows money and they have a debt ceiling, like how much they can borrow. I think I'm not sure what is happening with this. Maybe I should be searching some other articles for this. So this could be a huge topic on its own and not maybe entirely related to programming and technology, what we discuss in this channel. But anyway, if you are interested, maybe I will search. But anyway, let's move ahead. And the war in Ukraine and the ongoing pandemic, which is not ongoing at this moment. But anyway, these are the reasons the interest rates are high, they're saying. And so we are at the receiving end of it. That's it. Okay, and the next thing is inflation. When the inflation hit the economy hard in June 2022, consumers saw price increases of 9.1% compared to typical annual rate of 2% for steady inflation, according to the Federal Reserve. And yeah, one more thing that I should mention is this article is actually US centric. And so most of it is saying is from the United States point of view, which may not be totally applicable in India. But the tech job market is one such market which is dictated and which is basically influenced a lot by the United States. So whatever happens in India, it happens like it basically follows what happens in the US. So it is also related to India. So when we are discussing about the tech job market, so like specific things may not be related, but overall it's very much related. Okay, so let's read ahead. So I think some inflation is causing some issue in the US, which may not be directly related to India, but the relations to tech is almost direct. Okay, anyway, 2022 saw the highest inflation rate in 40 years, according to the US Bureau of Labor Statistics. The economy softened as people started buying less to accommodate these higher prices. The cost of living jumped significantly, and people and businesses had to make cutbacks. Technology companies saw price increases for services, so companies had to evaluate and make cuts if necessary. So, I mean, basically, inflation is causing lots of trouble for the companies, for the people, for us, everybody, for the tech workers. Businesses look to cut costs to cover their increased expenses due to inflation. Laying off employees is easily one of the fast cost-cutting measures because they are one of the largest company expenses. Yeah, definitely. Like they have to pay us salaries. So yeah, our salary is an expense for the company. So cost cutting means basically employee cutting. I mean, don't take it in a negative light. It's like employee salary cutting, and salary cutting generally happens by layoffs. Okay, anyway. So tech companies lose revenue when businesses cut back advertising. Tech companies such as Meta, Google, Instagram, Snap, and ByteDance have business models that rely on selling ads. And ByteDance is actually a Chinese company, but as we can see that even they are affected by the recession kind of thing that is happening, like all over the world and in the US. I mean, I was thinking that maybe China and Russia are kind of cut off from what happens in the US, but looks like not. Tech job market is like one global market which is connected through like how people are digitally connected. The job market is also connected the same way. Like I mean, no wonders over there, right? Okay, anyway. So this is we have a graph and we have large tech layoffs. So till April 2023. So this is 1 year ago, and we have almost like we have many companies that are laying off people, and yeah, many companies, and we are in deep trouble and higher interest rates. The Federal Reserve raised interest rates 7 times in 2022 and may raise them more in 23. The Fed raises its rates to slow economic growth and deter both consumers and businesses from spending, which reduces demand to ultimately lower prices. Okay, so I think they have a grand plan, but sometimes people get at the receiving end of it. I mean, some people. In this case, it is us. I mean, actually, we shouldn't be complaining because during the pandemic, when it was booming in the tech job market, there were lots of people who were having lots of trouble. So, for example, people who used to do manual labor, daily laborers, they had a lot of trouble in India specifically. You should be knowing that they were in such a shit show. And now, of course, as things are normalizing, they are, of course, getting more opportunities in jobs, and we are now paying the price. So it's like tit for tat. Not exactly tit for tat, because it's not like we were clapping for them for that. It's like it's, you can say, market correction. Anyway, higher interest rates affect how much a company wants to borrow due to higher costs. These higher rates directly impact the venture capitalists and other funding of startups. Companies do not want to invest in riskier areas when the company's future is uncertain. Economic uncertainty causes companies to reevaluate their hiring and growth strategies. The Fed has not changed the interest rates as of March 2024. Okay. Investor pressure. Investors want companies to decrease expenses as revenue slow down. VCs are worried that profits will be down this year, again after the large growth period. For example, TCI fund management called on Alphabet, Google's parent company, to reduce headcount and take action for improved profitability. Other tech companies such as Meta and Microsoft also faced a backlash from investors saying their headcount was too high compared to other companies. Okay, so even investors are pressuring, like they are nervous that where they're investing money and not. And so I think little bit of pressure is from their side also, because everybody wants to save their money. Like we want jobs because we want money, because I mean, either save their money or spend their money, but everybody wants money. So like techies, like tech people like us, we want money. Investors also want money. So everybody wants money. And now some other people, like the investors, they are also making money in a different way, like saving with and taking advantage of the interest rates. Anyway, let's move ahead. Overhiring during the pandemic, and yeah, we all know about this. Part of the rise in layoffs is due to the correcting the hiring of too many people during the height of the pandemic. The use of technology grew significantly as everything moved to people were working remotely, shopping online, ordering groceries to be picked up and delivered, streaming movies at home, and taking classes online instead of in person. Many were under quarantine and encouraged to stay home, so people spent more time online. The surge in online activity brought tech companies record level profits and started a hiring frenzy to keep up with the demand. Tech companies thought that this would be the new normal, expanding their teams and growing quickly. Meta nearly doubled its employee headcount in March 2020. Meta reported like almost 50,000 staffers, more than 80,000 by September 2022. And in November, the company announced it was laying off 11,000. So yeah, it's almost double in the sense 50,000 to 80,000. So not double, but close to double. And then they are laying off 10,000. Now, some work is shifting back to the ways it was before the pandemic. If people are doing hybrid work schedules, people aren't using tech as much as they were when working from home full time. Instead, they are spending time going into stores, traveling, attending sporting events, going to concerts, and dining in restaurants. With the lower demand for tech services, the need for these new hires also decreased. So yeah, so other sectors are making a comeback, and tech is paying the price. So what happened in the pandemic was truly exceptional. It was truly marvelous, I would say. People who made money are lucky. People who didn't make so much are not so lucky. Me being one of them. And now things are like happening, like going back to pre 2019 stuff. So post-pandemic reality, many workers hired during the pandemic were not entry-level employees, but experienced software engineers and developers earning salaries in the six figures with generous benefits. Companies are facing too many employees with redundancy and overstaffing. Companies had high hopes to continue this rate of growth. However, as restrictions lifted, people returned to pre-pandemic lifestyles. With a return to previous work environments, big tech companies removing the extra layer of employees hired during the height of the pandemic. So yeah, so that is the issue. After post-pandemic, things are coming back to normal, and which is also related to the market mature industry. The tech layoffs may also be the result of an industry maturing or becoming more stable after rapid growth. The tech companies may not be on pace to acquire as many new customers since many people have adopted new their services. Instead, tech companies may be looking beyond growth and diversifying into products or expanding globally. Okay, I'm not really convinced about this point. I mean, tech industry was always very volatile, and what kind of maturity is this? I'm not so sure, but okay, we can consider this to be one point. And Silicon Valley Bank collapse in March 2023. The industry faced another obstacle as SVB collapsed due to lack of diversification and a bank run. SVB funded tech startup companies when other banks were unwilling to take on higher risks. With the collapse of SVB, more venture capitalists and banks are going to be nervous about taking on the risk of startup companies. So startups are also facing the brunt of it. It looks like that. Depending on the size of the company, large layoffs may be in the tens of thousands of few hundred, which can be in a large percentage of its workforce. Some companies, such as Meta, have announced large layoffs in a couple of waves. Meta cut 11,000 in November, then cut additional 10,000 in March. Amazon also had extra large cuts, including 10,000 in November, 8,000 in January, and 9,000 in March. And other companies also cut. And this is like the news, and will layoffs spread into other industries. The US tech industry accounts for 8.9 million people in the total workforce, according to CompTIA's State of the Tech Workforce Report. Even though there have been several layoffs in the tech and the media industries, the other labor markets have been steady. The US employment rate fell from 3.7 to 3.5%. This is 50-year low. And as of February 2024, the national employment rate is increased to 3.9%. Large tech companies make the news with large cuts, but smaller and mid-sized companies are still hiring tech workers, according to BLS. So basically, other industries are more or less stable, and which is also correct. I mean, which is also natural because during the pandemic, tech was booming and other industries were hit. And now we are having a balance. So the best way is to upskill yourself and get accustomed with the new balance. And yeah, I would say that's it. So this is an interesting perspective, like what is causing all of these layoffs. We are hearing about layoffs, layoffs, layoffs. But this is kind of getting into the reason behind what is causing the layoffs. Like I will be reviewing more such articles. Like you should definitely let me know in the comment section below, like what kind of reviews you would want to see. And if you want to see more tutorials, I will be making some tutorials also. But I will also be making some reviews. So yeah, and also if you want to discuss with me stuff regarding tech and programming and anything, I have a Discord server and I will link it in the description below. You should definitely join that. And yeah, I will say that's it for this folks, and I will see you next time.